Hey everyone, welcome back to Corporate Decoder. Today, OneConstruction Group Limited just filed their annual report, and I'm seeing a major red flag that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. This company is facing some serious financial headwinds, and their auditor's report is raising some questions. Let's dive right into the auditor's opinion. The report from Audit Alliance LLP highlights that they've audited the financial statements for OneConstruction Group Limited and its subsidiaries. They say the financial statements present fairly. In all material respects, the financial position as of the 31st of March 2026 and 2025, and the results of operations and cash flows for the 3 years ended the 31st of March 2026. However, there is a going concern uncertainty mentioned. This is a big one. The company ended up with a net loss of over $13 million for the year ended the 31st of March 2026 and has an accumulated loss of about $6.7 million. Despite a positive net asset value and current assets, management acknowledges the need to continue its operations for the foreseeable future. They have plans for private placements or public offerings and got a forbearance undertaking from their major shareholder to defer a significant loan repayment. This all points to a company that is really stretching to stay afloat. Looking at the financials, revenue took a hit. For the fiscal year ended the 31st of March 2026, revenue was about $49.4 million, down from $53.2 million in 2025. That is a 7.2% drop. But the real kicker is the cost of revenue, which actually increased by 14.6% to over $56 million in 2026. This led to a gross loss of over $7 million for the year. This is a sharp contrast to the $3.9 million gross profit they had in 2025. Digging deeper into costs, materials were a big contributor to the increase. This line item jumped 61.1% from $11.5 million in 2025 to $18.6 million in 2026. The company says this was mainly due to increased demand from customers for pre-tested rebar materials. This rise in raw material costs combined with an inability to fully pass them on squeezed their margins. And then there is project loss for the year 2026. They recorded a project loss of nearly $10 million. The company explains this is due to cost overruns and final account adjustments on certain legacy projects. This significantly contributed to the negative gross profit. All these issues combined resulted in a substantial net loss of over $13 million for 2026. This is a dramatic shift from the $898,000 net income they reported in 2025. This isn't just a small stumble, it is a major financial downturn. Now, let's talk about the risks. The company operates in Hong Kong, and while they say they aren't directly influenced by the PRC government, there is always regulatory uncertainty. They mention potential impacts from PRC laws and regulations, new cybersecurity reviews, and anti-monopoly enforcement. This adds another layer of complexity and risk, especially for a company already struggling financially. Looking at the balance sheet, total assets decreased from about $49.8 million in 2025 to $36.9 million in 2026. On the other hand, total liabilities remained relatively high, leading to a very small shareholders' equity of just $283,000 at the end of 2026. This is a stark indicator of their precarious financial situation. A huge chunk of their liabilities is a loan due to a shareholder, totaling over $22 million in 2026. While the repayment date has been extended, this is a massive obligation for a company with such limited equity and a current net loss. Interestingly, in 2026, they recorded significant share-based compensation expenses of almost $1.5 million. This relates to incentive share options granted to employees. While intended to retain talent, it is hard to justify such an expense when the company is facing such severe financial distress and operating losses. The majority of the company's stock, over 56%, is owned by Rich Plenty Limited, which is controlled by Miss Hee Yun. This means insiders have a significant stake, but it also raises questions about whether they are committed to turning the company around, or if this filing reflects a difficult exit strategy. Considering all this, it is not surprising that their stock price has been volatile. Recent news headlines indicate a stock crash and shrinking performance, all while the price is described as being priced for perfection. This disconnect between market sentiment and financial reality is a major warning sign. When you are losing money hand over fist and your auditor is flagging going concern issues, that is a serious red flag. The risk I am watching is their ability to secure more profitable projects and manage costs effectively, especially given the project losses and the significant shareholder loan. My biggest concern is whether they can navigate these financial challenges without further diluting existing shareholders or facing delisting. What I am actually looking for is a clear path to profitability and a reduction in reliance on shareholder loans. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis valuable, please like, subscribe, and check out the Discord in the description.